son-in-law, you can't say no. I don't want to talk to you because and he's texting me for like half an hour. I was trying to understand your question, and I was ignoring. But at last minute, I text him. I says, "Thank you for the text, but I'll speak to you later." And he called me.
That is the
I can hear my
Asian.
sister.
That's the Asian
It's a
culture.
very yeah, exactly. So your only sister, she's our only sister, and she's, so I can't
Oh,
say
yeah, I know. I
so
understand.
much.
That is what our Asian culture, the richness of
Absolutely,
Asian culture is
exactly.
that.
Absolutely, yeah. I
Yeah.
can ignore my boss, but I can't ignore him. Even my mom
Yeah.
and dad, I can tell them. I'll call you later.
Yeah, yeah, right. True. Yeah. Right, okay, don't worry. We can start off now.
Thank you.
Yeah. Right. So we were discussing about the case study. I'll tell
Yes.
you something which I can share with you. Your management case study for next year. That is the February case study is going to be. I'll give you a little bit of a clue about it so that you can just start working on the thing.
Yes.
Yeah. It's about yeah.
About music.
Yeah. No, that's a phone. That's all right. If I for me, also, it will be the same story. If I start, I won't talk. It's a foreign call.
No,
Yeah.
I was being sarcastic because I could hear the
I
music.
know. This is all about this time management case study is about a company that is making feature films.
Oh wow, this is what I want to do in my life.
Oh, good. All
I
right. Okay. So it's
that's
about it's a
I
company.
actually
It's about
I
a
would actually
company. Mm-hmm.
ideally I would like to go once I finish this SEMA. I would like to work in media.
All right. Okay. So this is about largest filmmaking company in Europe. They say
Wow.
it's
Wow.
about so you can look at your. We can start. I mean, probably maybe by next week we should be able to start something on working on
Brilliant.
this area. Because
Very good.
I got the advanced information. The
Mm.
case study is going to be about a film company. It is going to be the largest film company in Europe. It produces and
Mm.
distributes films globally and owns a large
Mm.
library of film content.
That's what I want to do, Kumar.
Good. So yeah, right on the
I have
timing.
a bit of I have a bit of knowledge already about how
Very good.
movies and
Right. So
so
better start on a little bit of work on that one. I will get more information for you as we go along,
yes,
but the case study will be out officially somewhere in December, I think. But
yes.
this is the information what we have. 99% sure this information. All the time,
Mm.
I mean, the information what I had was all right. It is coming from the CIMA. So it's based,
Mm.
they are just at the drafting stage. So it should be all right.
Your
It is,
it's your contact.
pardon?
It's your contact in SEMA. Give me
No,
your.
it's somewhat official for
Okay.
for the recognized tutors. They
Okay.
do it now.
Oh, okay.
INSAF is not officially recognized, but I'm recognized as an individual. So
Yes.
I get it the thing in doses. So
Ah,
normally, yeah, in Dorsal they say it's all about a film company. So like that they give for the operational case study, they give for the strategic case study, and then by
mm,
next week I will have more information, what kind of a
mm,
company it is and all that kind of a thing.
yeah.
And just about 2 weeks or 10 days before the exam, sorry, not before the exam, before the officially the pre-series is out, I will have the advance copy.
Oh, brilliant.
Yeah,
So
for
one week.
me to prepare it. So we can share it and we can do it. We are not supposed to distribute it, but we can share it and discuss it.
So when will you have it? Before 1 week in first week in December.
Yeah. Should be in about first week of December. We should have it. Normally, I think it's officially out. The pre-scene will
Around
be
the
a
second week.
second week
Week of
of
December.
December. So we will be having it by first week of December.
Okay, great.
10 days before. So we can always take a sort of a upfront start immediately.
Absolutely.
Yeah. So we will do that one. Okay. Right. So anyway, we will go along with our work, what we have been doing. Just that will be a kind of a insight into our case study, into our analysis, what we were looking at. So look at last time we were looking at a particular question. So we remember it was a company that was basically, we are selling phones.
Yes.
Yeah.
Yes.
We sell through the operator, all that. So all this time the companies, what they are given is in a fictitious country, Farland, Highland, you know, all those lands. But the case study what I have right at the moment, if they don't change it, the information what I have is it is going to be a company in Europe.
Yes.
Right. So I think I think you can start a little bit of searching on the internet for the largest film company in Europe, and you may be able to get some idea out of it. Now itself, do work, start research.
So start searching on the biggest film company in Europe and have some more ideas.
Largest film company in the Europe. Find out what their problems. Find out. I will also start doing that one. So you know you can get ready for the case study quickly.
Absolutely. Absolutely.
Yeah. So that's
going to be probably UK based.
Yeah, probably UK based, most likely. Yeah, I'm trying to guess it, but I can't think of. But anyway,
there is big film schools in Prague, which is very popular. Czech Republic, very.
Yeah. So this is all about the feature films. But I suppose I think we should be able to get an idea. The idea is to study and to see what kind of a company, what are the problems they are facing. You know, all the integrities. You can find it out. So I think it's a good thing. You can start quickly on that one.
Sure.
Yeah, it's a listed company. So, you know, we should be able to spot something straight away. Right. Coming back to our case study, what we were looking at. So this is the operator got a deal with the airport, and the airport is still not an international airport, but it will be hopefully it will be an international airport. But so far, no airline has signed it. And the operator called us and said, "Hey, you can join with us, exclusive shop for you, selling your phones, our connections to the arrival people from the international airport, duty-free price." That was basically. So the marketing person prepared a cash flow, and she has given some information, and she says basically she has taken the sales based on a 200 square feet kind of a building outside. The people, the 200 square feet kind of a thing, what they sell as the sales figure, and she has worked it out on that basis. 5% inflation, the figures were inflated, the revenue figures. 24/7, the staff will work. So they will have 4 sets of staff working, 6 at a time in the shop.
Yes.
Right. So these are the information.
The question about the first question is about the cash flow.
Cash flow assumption.
Yes, assumption. Yes. So the second question was about the VAC.
Yes. So let's talk about the cash flow assumptions. What are the things you spotted on this one?
Again?
Any things that you spotted on the cash flow?
That's the thing, you know. So, I don't have any, that sort of technique, like sort of how to.
Okay. So I'm going to take you line by line.
Yes. Good thing is I've gone through it and I've watched your video a couple of times, just so you don't have to refresh. I know exactly what you're going to
do. Line by line. Look at the revenue figure first of all. 360, 378, 397. Look at what was told in the unseen. What was told in the unseen? The airport number of passengers are going to grow over the period of 5 years by 50%.
50%, yes.
Understand?
Yes.
What they said was?
They were saying the business will grow 5%, wasn't it?
What they said was, the airport said they still give an opportunity. Finally, they said, they hope to see passenger numbers growing by 50% per annum over next 5 years.
Over the next 5 years, yes.
So that means if it is something today 300,000, people arriving, it will be 450,000 over next 5 years. 50%
Yes.
over next. So it's a growing situation. But if you look at the cash flow of our Julie,
yes,
it is not growing. It is a constant figure. 360 growing to 378 is not because of the numbers. It is because of the inflation.
Inflation, yes.
So
yes.
he assumes that all 3 years we will be selling the same number of phones with a 5% increase due to inflation.
They mentioned 5% for the inflation? Yes.
Yeah,
yes.
because in the notes they say 5% inflation.
Yes, yes.
They say
yes.
We expect those sales to go up by 5% per annum in line with inflation. Can we see?
So that 378, 387 is in line with inflation. It's not according to the.
It's not according to volumes. It's not the volume. Volume is static, but because of the inflation, the prices are expected to go up by 5%, and that is what she has forecasted.
Yeah.
So two conclusions you can arrive. The airport is growing. It's a growing airport. Over a period of 5 years, it is going to grow. But she is assuming a constant figure. So we do not know whether she has taken the highest figure or whether she has taken the lowest figure. But what we know is in the cash flow, she has not provided for the growth. Right? If you are selling X number of phones this year, with the growth, next year it will be X plus some percentage.
Yes.
Yeah. So that she has not taken. So you can say from the line number 1 itself, that is wrong. Yeah. That's number 1. You will say 360 million because she has assumed that it is going to be constant. So that is wrong because the airport is growing at the rate of some percentage over a period of 5 years, 50%. So roughly about 10% per annum, if you take it, that growth number is not provided. So we do not know which figure she has based on. So that's a problem. Look at the numbers. They say in a 200 square meter thing, you remember I gave you a little bit of Excel worksheet. And on that worksheet, I worked out the average cost selling price per phone, $500, 484. Shall we say $500? Right. So if you are looking for a figure of 360 million, that is 30 million per a month. Agree?
Say that again.
360 million for a year.
Yes.
Right? That means 30 million for a month, the revenue.
Absolutely.
30 million per a month. 30 million if you divide it by 500 per phone, you will get 60,000 phones for a month. Shop selling 60,000 phones for a month.
You divide 60,000 units. Yeah.
60,000 units. That is what I did was 360 million is 1 year's turnover. I divided it by 12 to take 1 month's turnover. 30 million. I divided 30 million by the 30 million by 500 to arrive at the number of phones that is being sold in just shop per a month. 60,000.
Yes.
If you divide it by 30 days, right, 30 days, you will see they have to sell 2,000 phones for a day. Realistic or unrealistic?
That's very, very highly unlikely.
Unlikely, isn't it? In a phone shop to sell 2,000 phones for a day.
No.
For a minute, I don't know how many phones they are going to sell it. So that looks very, very unlikely, isn't it? Phone selling is not something which you can, it takes lot of time to, it takes lot of time to test the phone, show the phone, the different model. When you go to buy a phone, you have to spend about half an hour with the customer.
It's not like a grocery thing which
you
buy
you're not going to just buy the sugar or something like that, apples or something like that. These phones, they have to show this model, that model. Like in Pakistan and India and Sri Lanka, when the ladies go to buy saris, you know what I mean. How many saris they have to, how many saris they have to fold it, unfold it, all that kind of a thing. So you can see.
You give them your credit card and you walk away. Yeah,
that's the easiest to get. But you have to keep put a limit also and keep it, otherwise the whole credit card will go off.
Absolutely.
So you can see there. What I'm trying to say is, looking at the finance figures, you don't need to do big calculations. Little common sense intelligence will show this is very unlikely to achieve. So this is why we do analysis on the pre-scene earlier. So we know when she talks about 360 million, it's 30 million for a month. 30 million divided by 500, it is 60,000 phones. 60,000 divided by 30 days, it's 2,000 phones for a day. We know it's unlikely. I told you, remember, I told you when the marketing people prepares figures, we have to be very, very conscious, they are very optimistic people.
Yes.
So one thing she has not provided for the growth. Second thing, the figures looks optimistic. Third thing, even if it is not optimistic, if she says she has taken the average sale of an outside independent retailer outside the airport selling number of units, if she has taken that one as if it is, assuming if it is right, even then established outside shop and a new shop that is being opened in a new international airport, you can't compare.
Yes, absolutely. Because their business is not established. It will take us time to...
established business, what they sell. And if you and I go and start up a new film company today, and if you are going to compete with the film company in the largest, you can't compare because you can't sell the same number of films what they sell because they are established for long number of period. Yes.
High revenue, more bigger studios,
Yeah. So similarly, here also we can't compare. So the comparison is not right. What will be the good comparison so you have to do? If you were doing this kind of analysis, if you are going to open up an airport shop, what will be the good comparison to do?
I think it will be with a new business or compare it to another business which is brand new or unestablished.
Or rather compare to an airport shop in another country or in another location.
Absolutely, yeah. Look at the first 3-4 years figures and you can see how...
Exactly, yeah. Try to see a similar business always. Similar business. Similar market. So look at maybe...
The sale trends are going to be quite similar.
Yeah, sales trends are going to be quite similar. So you can get an idea if you can find in a neighboring country airport how much sales they do. And if you can sort of do like a number of comparison in the passengers arriving, you can probably work it out.
Absolutely.
Right? So you have to look at so one thing in the case study, one thing is to look at all these flaws, whatever they have, but also other thing is as a management accountant, you must come out with some recommendation. What are the ways, the better way to do it? You will have to say outside established 200 square meter can't compare with a new airport 200 square meter. Because outside airport, all the people are coming to buy the phones to that shop. Here in the airport, the people are not coming to buy the phone. People are wanting to go to the country, right? So they will stop, maybe stopgap just to buy the scotch or chocolates or perfumes to the girlfriend or the wife, but right, or maybe a phone, but not all the people.
Not particularly there for that reason.
Yeah, that's correct. Exactly. Right. So you can see. Discount 30%. Yes, I don't think we have a problem because it may be the duty-free element.
Subsidy to the airport,
Yeah, because that is the duty-free element. But you will find after that they have got the contribution and they have got the expenses. What is missing? There's something missing, big missing. What's that?
VAT?
No, VAT is maybe there because VAT is not a part of the revenue. It is just collected and just collected and given to the HMRC. It's not that. But there's something big missing. Look at your P&L. Look at your income statement. What is first line? Revenue.
Yes.
What is the second line? First line is revenue. In your normal income statement, P&L statement, what is the second line? Cost of goods.
Cost of goods. Okay.
Where is the cost of goods here?
Mm.
Isn't it?
Yep.
The line, the big line, cost of goods is missing.
Yes. So we don't know exactly how much they're going to cost.
Yeah, because the cost there, to do a sale of 360 million, to produce the phone, it cost, you know, that we saw the cost was something like, average cost was something like 278. That figure
Yes.
into the 30 million phones, so it's not there.
Yeah.
Isn't it?
So for the 2015, you have 22,000. Yeah.
22 billion cost.
22.82 million cost.
22.8 billion. When you divide it by 82 million phones, the cost comes to 278.
Yeah, per unit. Yeah, absolutely.
Per unit.
Yes.
So that is what I did. So this is what we do before the exam. So now what we see is where you are going to sell so many phones, right? Where is the cost of those phones? The big figure is missing. Big under. Big under. Julie has not provided the cost of sales. So her figures are totally exaggerated. Can you see?
In fact, yeah, quite wrong, misleading.
Yeah. This is what happens normally when they prepare, the non-financials prepare, right? So you have to be extremely cautious. That is why examiners put up to see whether we will spot these things.
Would they not, like generally in real life, sort of like when you're promoting sales or you went as a marketing manager, would you not have a finance guy to go through this before they send?
No, because what happens is anyone can prepare any statement and send it. The board should be intelligent enough, good enough to know these statements need to be reviewed by a finance guy. Not every time a finance guy, because sometimes the marketing guys don't want the finance guys to get involved at the initial stage. The whole thing can collapse.
Obviously.
Yeah. So they will prepare and send it, but they must have a kind of a basic knowledge of finances. But having said that one, these things do happen in the real life. I have seen finance guys sometimes they prepare and they also can miss something like this.
Yeah.
So these things are all possible things what can happen. So you can see revenue figure, there is a problem. Cost of sales, they have not included in the whole thing. Growth not provided. So those are few things what we have. Right? Rental deposit.
So cost of sales, cost of is it cost of goods or cost of sales? Like
cost of goods. Cost of sales is cost of goods. To arrive at to sell 360 million worth of items, we saw they will sell it at average 500. Okay, 30% less. They will sell it duty free. So for the 500 cost, they have a 278 per unit or 280 per unit. It's about 56% of the sale is the cost. So that is not included. If you remember the pre-sale, they have a big cost. Pre-sale, first line is always the revenue, second line is the cost of sales. So cost of sales should have come on this business. That does not come. So this is what I say, right? The cost of sales, 22 billion, that is for 82 million phones. So when they are selling that number of phones, they will have a 30 million. They have a cost.
Then you get the GP.
Yeah, then only you get the GP. So he did not include the cost of sales. Neither did he have a GP. She cannot get a GP. That is one. So couple of problems already we have spotted out. So this is what the examiner is expecting as the management accountant. Your eyes will be on the figures prepared by some other person. If you prepare the figures, it's going to be a big blunder. But when other person prepares, also as management accountants, we are trained, we can identify those figures. So number one, the growth is not reflected. Number two, they are compared with a established outside distributor against a newly formed airport. Number 3, 360 million figure looks like 2,000 phones for a day, which looks totally out of this thing for a for a product like a phone to sell 2,000 phones in an airport for a day. You know, you can't do it, right? So that then the big item, the cost of sales is not included. Then you are preparing a cash flow rental deposit 60 million. Now keep a rent as a deposit at the end of the cash flow. When the contract is over, that will be refunded because it's a deposit.
Yes.
So in year 3, it should have come as an inflow. Isn't it?
Yes, so after 3 years.
After 3 years, after 3 years, because the rental deposit is a refund. If there's some damage or something, they will recover, but the balance will be refunded, isn't it?
Yes, because we were supposed to pay for the first 3 years.
Yeah, first 3 years we are paying the rent 40, 40, 40 we are paying. This is a deposit. When you say deposit always refundable.
Yes.
So that should have come in the 3rd year cash flow as an inflow. That is not reflected. Fittings all right, because fittings are carpets and all that. So after 3 years it will not have a value. You have to write off. Right? You can't pull the carpets and go now. So the fittings 31 million, yes, it's all right. Then the next one is rent. Rent, if you have agreed at the outset for all 3 years 40 million, 40 million, 40 million, it's all right. Right? If it is not so, annually, the rent may increase in line with the inflation. If revenue is increasing, the rent also may increase in line with the inflation. However, if you have agreed for a 3-year period at 40 million, then no problem.
Yeah, if it's agreed, same,
Yeah, same amount, they will agree for 3 years and it will remain 3 years 40 million. What about the wages? Look at the wages, how they have worked it out.
That's normally increasing as well.
Yeah, wages, what they have done is they have worked out on a 24/7. We will eat 4 shifts. Each person will be paid 125,000. 125,000, 4 shifts, 6 people into 12 months. That is how they have got the 36 million. So wages, we know by our experience, will go up with the inflation.
Yeah, even if it's minimum wage, it will go up, yes.
Even if it is minimum wages, that is the minimum, the inflation must be given.
Yes.
That is also not there. Can you see?
Very interesting.
Lot of things. Once you really go into that line, 6, 7 lines, you can find many things in this whole statement. Then in the exam, you will be given the table, the discounting factors. If you look at this discounting factor, even though he has not told what is the discounting factor, when you look at the table, you will know the discounting factor is 10%. Right? Because the year 01, year 1.91 cent, 917.841. Once you look at the, even though examiner has not given you, the moment you, in the table will be given in the exam. Examiner will give you the table of the discounting table. So when you look at that discounting table, you will realize it is the 10% table they have applied. So in other words, they are discounted at the rate of 10%. Right? So that is what they said, because the 10% rate is, the 10% rate for the year 1 is 0.909, 0.917, 10% rate, 0.917. I'm trying to see what is 0.917, 9%. They have taken 9% the rate. If you look at the table, if you look at the table, you will see year 1.917 means 9%.
Yeah.
Right? So 9%. So now I'm going a little bit more detail into this one. I want to show you. Normally, I'm going to do a little bit of F2 with you now. F3, F2, yes. Right. I'm going to look at now this company. See, I'm going to go for the PC now. Look at their finance cost. how much they are paying? They are paying 399 million as finance charges. Last year they paid 262 million. 162 million and 300. So this year they are paid 399 million. Look at their...
Is the cost of debt?
That's correct. Finance charge is interest what you pay.
Yeah.
399 million they have paid. Now I want to see...
On Wednesday you were explaining me the cost of capital, you know.
Yeah, that's right. I'm coming to that one. Cost of capital, yes. Because we discount it at the rate of cost of capital. Now what I want to show you is, I want to show you what is the total loan outstanding figure. Look at the balance sheet. The balance sheet, loans. At the beginning of, at the end of last year it was 1717. At the end of this year it is 2614 loans. 1717, 2614. So even if I take the average figure, if I take, this is the opening figure is 1717. If I take the closing figure as 2614, if I divide it by 2, I will get the average loan outstanding during the year. Are you with me? Right? At the beginning,
I just missed. I know. This one you just calculate the equity cost.
No, I'm calculating the loans.
Cost of capital. Yeah.
Loan. I'm calculating what you call the cost of debt.
Oh, cost of debt. Sorry.
Cost of debt. I'm trying to calculate that.
On the top,
yeah.
But I'm trying. You have cost of
equity also.
Equity also, yeah.
Yeah, so there's something called cost of equity, there's something called cost of debt, but I'm calculating the cost of debt now. So cost of debt is, at the beginning we had a 1.7 million outstanding at the beginning of this year or the closing last year. At the end of this year there's a 2614 outstanding. So if I take the average outstanding for the year is 1717, 2614 divided by 2. Opening plus closing divided by 2, right? So that's the average loan that is outstanding, 1717, 2614. The average figure, the 4331 divided by 2.
21.5.
Yeah, 21 points. Yeah, 21.66 or something like that. Correct? That's the average loan.
Our maths crazy.
Yeah, maths.
Sometimes I'm doing figures at work and they're thinking, what are you doing here in the hotel? You should be accounting.
Yeah, this is maths. So 2166 is the average loan. How much finance charges we paid during the year? 399. So you can take it as a percentage, average percentage of interest. 399 or 3, what is the figure we said? 2166 is the figure. 2166 is the loan figure. Let's look at the finance charges, 399. So 399.
399 is a total of everything, yeah? It is the total of
finance cost. No. On equity you don't pay finance cost. Equity you pay dividends. Dividends are paid out of profit after tax. But this is what you pay. Yeah, this is for the loans. Finance cost is paid only for the loans. So what I said was the loan outstanding was, average loan outstanding was 2166. Total interest paid was 399. As a percentage, you can find out what is the percentage interest what you pay.
Yes.
Which is going to be about 18%.
Okay, yes.
18%. Now my argument is, always there is something called cost of equity, cost of debt. Always cost of equity will be higher than cost of debt. Why? Because equity, if you invest money on shares, very risky. Very risky. The directors may pay a dividend, directors may not pay a dividend. But if you give a company a loan, the directors are under obligation to pay the interest. Also, dividend is not tax deductible, but interest is tax deductible as an expenditure. So there's a tax relief. So if you really look at, always cost of equity will be much more higher than cost of debt because of the risk, right? For the company.
Just need a little more.
Okay. Now imagine you have $100,000 in your pocket.
Total finance cost 400, 399.
399.
And then
we calculate the average cost of loan, average balance outstanding 166. We found the cost of debt before interest to be before tax to be 18.4.
So that out of the total finance we pay, 18% of that goes towards the cost of debt.
18%? No. The interest rate is 18%.
Yeah, sorry, interest.
Interest rate, because 399 million we have paid on a loan outstanding of 2166. So average interest we pay is 18.4%. That is what we call cost of debt.
Amount of interest, the interest rate that we paying on the finance, on the 399.
399 is the total finance charges, total interest. The loan now outstanding is 2166. So we pay on a 399 loan 2166 on a 2166 loan 399 interest. 2166 is the loan now standing. Imagine you have taken a loan at the beginning of this year, 3 million. At the end of this year, the balance outstanding is 2 million. So the average loan outstanding during the year is 3 plus 2 divided by 2, 2.5 million average. Opening plus closing, when you divide it by 2, you get average. And then you see how much interest you have paid during the year. So average loan was 2166. The total interest you paid was 399.
Yes.
So as a percentage, you are paying 18.4% on the loan. On the loan. Is it clear now?
So the total amount of loan that you paid for the whole year?
No, not the total amount of loan you paid. Total amount of interest you paid on the loan was 399. That is what charged to the P&L.
Yeah. So that's the 18% of 2166.
Exactly.
I'm with you there.
Exactly. Yeah. Okay.
But then the cost is so 216 is the total cost you paid.
Cost of debt. That is the percentage of interest you pay, and that's what we call cost of debt. For the company, it is costing them to borrow money. It is costing them 18%. It's like a bank loan.
Just like a bank loan. Okay. Yeah.
It's like a bank loan. Yeah. The bank is charging 18%. So on a 2166, you have paid 18% interest, 399. That is what has happened.
I agree with you there. Now, the second point, which I was a bit confused, that you were saying that it will always be high.
Yeah, now I'll come to that one. Now imagine you have 1 lakh money, 1 lakh pounds in your hand. You can either invest in company A as a loan, or either you can invest in company B as equity. You have 1 lakh money. You can either invest in company A as a loan or company B as equity, shares. What is more risky for you?
More risky is, so you either give a company a loan.
Yeah, there are two companies asking your money. One company is prepared to pay you interest, loan. Other company says, you give us, we will pay you dividends. What is more risky?
Shareholding, sure, if it goes down, you lose all the money.
Yeah, shareholder, that's correct. Because the shareholder loan, if you give it, the company is under obligation to pay you the interest.
Also, they are insured as well. If they can't pay it, somebody else will pay.
They will have. You may have a mortgage, all those things. Everything is there, and even if they don't pay, you can go to the courts, and the court will order the company to pay, whether they have profit or not. But if you invest in equity, there is no guarantee. You can't go to courts. As you said, the share prices can come down, the company can collapse, anything, you might lose your money. So surely investing in shares is more risky. Right? Now,
but that's where the money is as well.
Exactly, that is the exact point. Now, because of that, now most of the people, they can easily invest in government treasury bills and get a very low rate of interest. But they go and invest in stock market. Why?
Because, like you said, if the company, if the shares drop, if the company gets out of the market, then you lose all the, you use the equity on them. And
but why do people go and invest? Still people go and invest.
Because it's high risk, but it's high rewarding as well.
That's the point. That's the point. Now you have to note down that one. High risk, high rewarding.
Yeah.
High risk, high rewarding. You want a higher return. Higher the risk, you want a higher return. Now,
I know a chartered accountant in London. He's probably on about 50,000 a year. He's done a ACA last year, so which is a very good salary, 50,000. But he makes maybe 200, 250 every year. And he's 23 on just I don't know how he does it. The share. I have no idea how to invest in. But this job is just a show off, really. It's just a safe like income coming. But he's more spending more time in the London Stock Exchange.
Lot of money. But of course, as much as you make money, suddenly overnight you can lose everything also.
30, 40 grand in one night. It's not like gambling. Basically.
It's something like a gambling. I mean, you have to study it and do it. Otherwise, it is a gambler. You are a gambler. Right? So now look at that 100,000 figure what you had. You can invest this 100,000 in this company Portaphone and get a 18.4% return as a loan if you give it. If the company Portaphone asks for 100,000 in equity, how much will you expect? 18.4 or more? As a loan? Yes. As a loan, you will expect 18.4. As a equity, you will expect much more than 18.4.
Absolutely.
Now can you see, for the company, when you invest as equity, it will cost more than 18.4.
Omar, the way you explain, honestly, it's amazing. A layman like me, I was just telling my missus yesterday, if I have money and the time, I would just move to Sri Lanka for 1 year, finish SEMA, come back, and make a lot of money in UK.
That's a good one.
Get a house near you. In Sri Lanka now.
Thank you. So you can see. Can you see what's happening now? Because of that, if the company has to pay 18.4 on the debt, definitely they will have to pay anything more than 18.4, maybe 20, 23, 24 on the equity. Understand? So because of that, now the next thing is, you remember I told you cost of capital is what I call weighted average cost of capital. You have both kinds of things happening. 18.4 funds, loans.
Yes.
And also we have the 23 or 24 equity also. So the mix of these things, the equity and the loans, is what we call the WACC.
Which is around 20% if you call this 24, 23.
It has to be something more than 18, something less than 23, isn't it?
Yes.
I just took some figures just to explain the illustrative.
So the point is, even the WACC would be higher for than the cost of debt,
It has to be always higher than the cost of debt. It will be lower than the cost of equity.
Yes.
So it will be somewhere around about 20 or something like that. Okay.
Right? Back to the question the question that you gave me. The marketing manager, she assumed the WACC, and because
she used the 9%.
So CEO is saying that she's used our WACC. So are these figures in real life? Are these figures more open to other companies knowing how much our WACC as a company, or is it something which we keep it private between the FMs?
No, but the WACC no one will know. but you can calculate it later on. You can calculate it if it's a listed company. You can look at the dividends, because now we know the cost of debt. You can calculate it from the financial statement. These are public statements. You can calculate.
So a lot of stuff for the listed companies is out in the open. People,
it's out in the open. So you can calculate it. The lot of the financial analysts can calculate it. This is one of the bigger disadvantages being a listed company.
But that's how people invest as well. The good.
Because exactly, all right. The good side of it, the people can see everything very transparent, and people can take the right, appropriate decisions.
That's why there is a special post in big companies or big. Sometimes rich people have their personal investment managers. So that person is for one rich guy. Is investing money for one rich guy. Because he knows what he's doing. So rather than that, if you don't know what you're doing, is gambling. But if you know what you're doing.
Right. If you know what you're doing the right thing. I do a lot of things. I do a lot of work in the stock market here. I make some money out of it just to keep my living going. But of course, I do a lot of study or a lot of analysis and try to do. Certain times you lose it. You can't all the time. You can't do it. But certain times you lose it. But generally,
your experience. You must be.
You can generally get, as you rightly said, all these. If you look at Pakistani cricketers, Sri Lankan cricketers, Indian cricketers, they have a lot of money. They have fund managers who will invest their money for them to make money. All the big cricketers of all the three countries of our country, the richest people in our country are the cricketers and the politicians. So they put their money, and there are fund managers who can do the job for them.
Wow.
That's a lot of big work. And there's another profession for this one, but you can do it later on when you are qualified in SEMA. There's something called CFA, Chartered Financial Analyst.
Yes.
Yeah, good exam, very good exam. That gives you a lot of analysis. Not only the London Stock Exchange, you will know about the New York Stock Exchange. You will know about the
generally in UK people who go to a CFA have already got 4 or 5 years post-qualified experience.
Exactly.
And then a lot of people in their mid-30s, late 30s studying CFA.
Yeah, because they are very, very skilled. They know not only the London thing, they will know the entire world market, They know they are worldwide investors. They know whether to invest in India, whether to invest in China, whether to invest in America.
But the good thing about it is a lot of traveling, which I would love.
Because you have to travel, you have to know the markets, you have to do analysis, the government setups, all that kind of. But now I know right at the moment, a lot of people are thinking in this Donald Trump's victory in America. It is causing few people few heartbreaks. A few people are thinking it's going to be a different story. I was told in Malaysia the dollars started appreciating.
So also China is thinking of building a new port near Malaysia, which is gonna cause a big downfall of Singapore, Singapore is obviously a big market there. So it's a lot of things happening. I think Asia is going to rule. Pakistan building port in seaport, because world deepest seaport Pakistan has built. Today I read the news that China has built it for us. Today Russia has taken it. So all that Central Asia will get access. So I see the future is towards this side of the world.
Yesterday our Prime Minister made an address, and he said that all this time Europe was dominating, but this morning he was addressing a forum, and he said the new thing will be the Asia will be dominated very soon.
Absolutely, South Asia especially.
South Asia. Already China now in Colombo, Sri Lanka, they have taken some big acreage of the sea, and they are reclaiming, and they are putting up what they call a port city, Colombo.
Wow.
Already they started work. They are doing it. The new government stopped it, but China is so powerful that whatever it is, they managed to get the new government in, and now they are going ahead. They are putting up a huge port city.
China is against it?
Who?
China is against it, or
no? China is doing it. No, I mean we had a change of government, So for political reasons, then yeah.
That's what I was going to say. I think because you will have access to the Indian Ocean. I think India wouldn't like this because of your location.
Exactly.
China will be happy, but India will not like it.
Yeah, India doesn't like it at all. But anyway, now you know China's power is so much. The opposition that was in opposition last year, they said that when they come, they will stop the project and all that. But they could not stop it. Even as they came, they stopped it. But then first invitation to the new prime minister, the president was from the Chinese president. And when they went and came, everything changed. I do a little bit of consultancy for our Prime Minister in Sri Lanka. So immediately after he came from China, he asked me, Kumar, how are we going to sort out this problem? Because already we have told the masses that we are not going to do it, but now we have to do it. So
because of the money.
Because of the money and because of the Chinese power. And there are a lot of money, exactly. I mean, almost all our economic the centers are all Chinese. Yeah. Yesterday I was at a meeting. We were renting out the down south port. The Prime Minister Secretary said within 20 minutes we want a decision. Three Chinese firms, and all three Chinese firms within 20 minutes they came out with the decision.
Wow.
$1 billion transactions happening within 20 minutes. They take decisions. So that's the economy, that's the environment. These are very interesting ones because you know even the film industry or whatever it may be, in time to come, it will not be Europe. It will be this side of the country, this side
Absolutely.
of the world.
The amount of people who going to cinema is crazy out there. Absolutely, I agree with you.
Yeah. Now India particularly, right? They have a massive market. So you can see even if the films are produced in Europe, the market is Southeast Asia.
Absolutely, 100%.
So you have to look at this market in that angle. You can see even in the phones, I saw the market is Asia all the time, right? So what I was trying to tell you was, look at that lady, the Julie, discounted it at 9%. Can you see? 9% is unrealistic.
Absolutely, yes, that's true.
Cost of debt is 18%. We know equity is going to be more than 18. So because of that, the WACC is going to be more than 18, and to do it at 9% is unrealistic.
I think the whole purpose was to increase the NPV. So
yeah, because, you know, that's natural. That's natural. That's always the people who will want to put up a project, they will exaggerate the figure. That is why you and I are employed by the company. We only can see, our eyes only will see. Even in the government projects, this is happening. Sometimes some of these ministers are fighting with me because the Prime Minister has asked Kumar to go through the figures. So when Kumar goes through the figures, I spot things like this and tell, and the ministers really go mad with me because they want to do certain days and you can't do it because certain, you know, cost of goods are not there, WACC is understated, all those things, all these things are done to show the people or the board a big positive NPV and to carry and to carry either deliberately or unknowingly. So this is why you and I are trained. This is why this financial analysis is a very, very important area in our pre-scene, in our case study. This is where everything will come up. So this is why I'm doing this exercise with you, because this will give you a lot of meat for you to go into the other things when
Now I realize when you were saying rather than studying individually, when we go into problem solving, you learn every bit in that.
Yeah, right. Because you know, through the problem solving, you get lot of now the things what you learn today, you will never forget it. And even if I do hours of lecturing, it's you know, you can't absorb it.
The next day, what I do, I listen to the video again, and then I notes. So last time when I listened to the video, I made the formula myself. I wrote it on the paper, cost of capital. So it's very good thing.
Very good. I think this is very good. That is what you must do. You must take the recording, go through that one, and this way if you do it, today some of the students are sitting for the strategic case study. After the case study, the case study, they told me they were doing very well because the way that we have approached the questions, it helped them a lot to do.
Yes,
It's not the,
already taken the exam.
Yeah, today, because today was the exam.
Okay.
Yeah, last day was today. So no, tomorrow is the last day, I think. So because there are 5 days. So some people have said for today, some people said for yesterday, all that kind of a thing. So, but
how are they doing so far? Good.
So far good. So far good. Yes. So far the indications are very good. Not that, because now these are some of the questions what I did with them, but not that they have got the same question, but by learning to this kind of questions, they know even if it's another thing, how to attack it.
You could pick a different thing from a different question into the question.
Yeah, that's correct. That is what you do. That is what we do. Right. So just go a little bit further. I just want to finish it up before I finish it up. I just want to do some more thing. So you can see the discounting factor is wrong. Wages, we can see they have not inflated. And also what you can see is they have provided 24/7 week. They are expecting people to work without any leave, without any absenteeism. They are not provided for anything like overtime or anything.
So the HR is not covered either, yeah.
Yeah, overtime, that area is not covered. So that is also understated. Also, there is no manager or something because they have put same people 125, 125. Thing like a shop needs a kind of a manager and a deputy manager maybe, because you can't work 24/7 operation without at least 2 managers. So these are what we see in airport shops. So what I did was I just went and had a chat with some of these airport people to find out how they manage it. So they have a manager and a assistant manager. Manager is on 12 hours, assistant manager is on 12 hours, something like that. So we have to have a kind of, so they are not provided for any of those things in this cash flow. So now you can see, when you go through things like this, you will realize how much, now look at this figure, NPV 385 million. Super. If no one knows about these things, they will agree, oh wow, 365 million, we have to put only 91 million investment, let's go ahead with it. Rental deposit 60 million, 31 million, super. But a person coming with the eyes of an accountant will see lot of flaws. And you will ask them to, rework the figure. So you might want to get another committee or some people to work on the figures.
I just want to get a bit more understanding on the discount factor. And also how, so is this 385 come from calculating the cash flow basically? So taking 91 out of, that's the initial investment, and then you add the so that you add the rest of the 3 to get 385. Yeah, I see that.
Yeah, we got the 91, 100 minus 91 plus 161 plus 159 plus 156. The next 3 years it's going to be a positive cash flow. Today it's a negative cash flow. So the cash flows without discounting, the minus 91, 176, 189, 202. But 202, what you are going to get in year 3, today's value is 156. 189 you are going to get end of second year is worth 159. 170.
That's the discount.
That's a discounting factor.
That's depreciation basically.
That's the depreciation of money value due to the interest, and that's what we had done. So the discounting factor, even though the examiner has not given. Yeah.
Yes. So basically, you multiply 176 by 0.9, and then you get 161.
And 189, my point is, so that you get it from the table, and you multiply it, and you get the figures.
Cash flow, yes, that's fine, yeah.
So that's what we did to this. So now today we would have understood, looking at a NPV figure, how much you can find out line by line when you go, the mistakes made by the others. Even the accountants make mistakes. Even sometimes the deliberately they make mistakes, you have to find out all those things. That is our job. I have turned down lot of government.
Management account.
Yeah.
As a management accountant, you'll be overlooking even the financial accountants figures and stuff.
Yes.
Because you're doing a bit of micromanagement, like
you're doing a lot of micromanagement. You will look at the figures with a more with a microscopic eye. All the figures. I have turned down into the government lot of big projects that came. I have turned down because the figures are very false. It can happen. This is why we have been taught to do this kind of a thing. So now you will realize the importance of a management accountant, how he knows to look at a cash flow and say what it is.
No wonder, Kumar, last 3-4 years, CIMAs are getting paid way more than ACCAs qualified. A bit less than ACAs, but way more than ACCAs. The start might be similar, but 3-4 years down the line, the CIMAs are crossing ACCAs very quickly.
Because the CIMA is focusing more on the management accounting aspect. ACC is more on the auditing and the practicing aspect. So I think CIMA
they have a better version in ACAs. So that's why they prefer ACAs, and when it comes to management,
even in Asia, CIMA is right on top now. Exams are becoming tough, but CIMA is right on top. They're much more than chartered. That is because the CIMA qualified person is a very versatile person. His mind is open all over.
So you're saying it's bigger than is bigger than ACAs right now in Asia, then, is it?
Yeah, in Asia it is gradually. Earlier, say the time that we were doing, it was ACA all the time, right? No one recognized. No one recognized CIMA in that way. But today, CIMA is becoming all over, and of course, they spend a lot on promotion. They spend a lot on their intakes of students in Middle East. So tomorrow I'm starting some classes for the Middle East area. They do 20 lessons of F3, P3, E3 free of charge for the students. They pay us, but the CIMA is paying us, and they are getting the students free of charge to listen to come for the online classes.
Wow. So CIMA was from there.
CIMA is promoting. CIMA is promoting very well in the Middle East market. So tomorrow I'm starting on F3 and P3 with lot of students, and they go to the schools, and they do in Dubai in the schools for the certified course. I'm doing some classes for the school straight away. From here, straight to the school on the projector. All that is to increase the intake of students for CIMA. So CIMA is doing a lot of promotion work, much more than AC and much more than ACCA. Right. So I think that is my first part of the question.
Yes.
I did. I will touch on the second part because that is also very relevant. Next time when we meet, that is, I want to touch on this WACC suitable rate. So we have already discussed this one. We know the WACC, what they have applied is not the suitable, but I want to go beyond that one. Should we apply our existing WACC even if we calculate it, or should we apply a higher rate? So we will discuss that one for 5 minutes, 10 minutes next time, and then we will try to move in to our film if I can get more details.
Yes.
How is your calendar next week?
Next week, how does Sunday look for you?
Pardon? Sunday,
how busy are you? Yeah.
Sunday. At this time I'm all right. Sunday.
What time you think?
That is 4 o'clock is all right for me. Sunday, say after 4 o'clock I'm free.
Sunday, shall we do at 6 p.m. Sunday?
Sunday 6 p.m. is all right. Fine.
Is it too late for you?
Or? No problem for me. Sunday 6 p.m.
I don't want to cause trouble. You don't want you to wake up.
Stay awake. I what I do is I stay up late, but in the morning I sleep.
Fair enough.
Yeah.
Yeah.
I also go by
Okay,
mostly by the UK clock now.
Bless you.
Yeah.
So Sunday 6 p.m.
Yeah. All right.
And then Monday and Tuesday. Tuesday I'm in the meet. Tuesday I can do late. I don't know how late.
Yeah.
What's the late you can do?
Yeah, because Tuesday I have this Middle
Yes.
East classes happening at 4 o'clock. I can do any day next week at 6 o'clock evening.
Any day.
Yeah.
So okay. Can we latest? What's the latest you can do on Tuesday?
Say
I'm in a meeting.
7 o'clock I can manage. 7 I can manage. 7 is 12:30 here. So by the time I finish, it will be 1:30. That's all right for me.
That is quite late.
Yeah.
Is that okay then? 7.
Yeah, 7 is all right by me. Tuesday I can do 7 o'clock.
Yes, that's fine.
Yeah.
And then so we can do Sunday 6 p.m. Tuesday 7.
Yeah.
And then perhaps Thursday.
Yeah, Thursday we can do it. Say 7 again.
Yes, that'd be great.
Yeah. So we have Sunday, Tuesday, and Thursday. That's all right. Fine.
That's all right for now.
Right. Good.
Yeah.
Right. So I'll see you on Sunday 6 o'clock.
Brilliant. Thanks very much, Kumar.
Okay.
Thank you.
Have a great day.
Thank you.
Bye.
Cheers.
Bye.
Bye. Can you please send me the recording for this one? Yeah.
Sure. Yes.
Oh, is it
I
going to be
will.
on the YouTube anyway?
Pardon?
It's going to be on your channel anyway. It's going to be on your YouTube thing, isn't it?
Yeah. I will upload it to the YouTube and give you the link.
Thank you. All right, Kumar. Thank you.
Okay.
Bless you. Bye-bye.